So, hi guys, welcome back to TradFi Bitcoin Club. Today we'll be talking about Jack Muller's vision of 21. So, 21 is a publicly listed company on Nasdaq in the US. Currently, it's trading around at $5 something cents, and the idea is to understand what should an ideal Bitcoin company should look like uh, from a POV or from a perspective of Jack. So yeah, let's start. So to the people who don't know about other Bitcoin treasury companies are like the treasury companies that are out already there in the market. They are uh, like continuous capital raising companies, but Jack has a different idea um, to basically he has a different idea. He has a different view of basically what should be an ideal Bitcoin company. So let's start. Uh, in the meantime, is my screen still visible or
Yes, it
my
is visible.
screen is visible, right?
Yes, yes.
Okay. Text and everything is good or it is small.
It is okay. Yeah, it is good.
Okay, okay. Thanks, Ahmad. Okay, so let's start. So today is 24th June and we will be discussing ideal Bitcoin company from Jack's POV. To the people who are not aware, Jack is currently serving as a CEO of Strike and also XXI, so 21. So he is currently the CEO of both the companies, and as I told you, XXI is listed in on Nasdaq. The ticker symbol is also XXI, so you can go and check it up. Now coming to what is the thesis around 21. So the thesis around 21 is basically so 21 wants two economic engines. The first is the treasury engine. Treasury engine, in that treasury, he will just hold, he will just hold and grow Bitcoin per share. And by the way, I want to tell you a fact about 21. BPS, that is Bitcoin per share, was firstly used by XXI, that is 21. I know you guys might be thinking like, no strategy or like started adopting Bitcoin, but strategy took some time to convey this metric, BPS, with um, like in their earnings calls or in their legal documents like 10K or 10Q. So strategy did not, uh, what I can say, they were discussing with their legal team that should we like create this metric or should we not? And uh, so basically the point is Bitcoin per share was first brought to the market by XXI, at least to the US markets. So to the people who are not aware, Bitcoin per share is basically total BTC divided by ADSO. ADSO is assumed diluted shares outstanding. So, like you can also take basic shares, but to be conservative enough, I want to take like all the total numbers of shares that can be or that can come in the future as well. So, for example, companies like in case of strategy, they have convertible bonds. So if those bonds convert, new amount of shares will be issued. So this is also factored in today when you calculate Bitcoin per share in via using this ADSO, assumed diluted shares outstanding. So there are various methods in which you can calculate BPS. Like one more method is basic shares. In basic shares, uh, we will only take into account the number of shares that are out today and will not include any future uh, shares that may come into the supply. So there are various metrics. Then, okay, so this was about treasury, hold and grow Bitcoin per share. This is the main thing, and this is the main thing in other treasury companies or other Bitcoin treasury companies out there in the market. Now, the interesting part that Jack has talked about is operations and building products around Bitcoin economy to generate cash flow. So I will come into that part. What products, like for example, all the products that you can imagine in a Bitcoin economy, like lending, borrowing, and other stuff. So all these things, he wants to build these different kinds of products with XXI. But XXI is now live close to I'm not too sure close to a year, but it should be 6 to 9 months. So from that point in time, Jack has a great, like this is now my perspective, how I see things. Jack has a great way to put on his vision, but that vision um, has not followed the actions. Or the company is stable at around 43,000 bitcoins, which was bought in the IPO phase only or in the SPAC phase only. So after that, no new amount of bitcoins has been added in XXI. And if you also go and check their site, you won't find a whole lot of info or something that we can look into. So that is also pending. I think the last update that we got is around like 26th April 2025. So if you go into the news section, that is the last update that which we can see on their site. This is one thing. Then, so these are two engines, treasury and operations, and he will use these two engines to compound this thesis is that these two engines will reinforce each other. Like operations will basically the free cash flow whenever you deduct the operating expenses and the other expenses, variable expenses, and all of that. So at the end, you will come with free cash flow that is uh, that can be invested into the further growth of the company or the further or let's say Bitcoin acquisition. So these two engines will go hand in hand, and while the so this treasury, so increasing number of bitcoins will provide credibility and collateral and also capital market access. So the more number of bitcoins, the more number of like the higher the credit quality, the higher the capital market access, capital access, and high and as we all know, Bitcoin is the pristine collateral. So when they increase Bitcoin in their balance sheet, the collateral, like they can do stuff with Bitcoin. So why this combination is potentially different? Because the public market currently has two proven, but according to Jack, they are incomplete models. Now, I want to spend some good amount of time in this third slide because this is interesting. Like this is so if you go back and look Jack's talk in the Las Vegas conference and his vision, so there he talked about what is his vision with XXI. Now let's broaden the space for some time and let's look at this quadrant. So on the x-axis, you can see Bitcoin conviction. So what is the conviction? of a company. So to the right, when you go to the right, the conviction that Bitcoin increases, and on the y-axis you have operating income or cash flows, or let me say operating income. I think operating income is much better word. So as you go higher, you will see higher amount of cash flows. So there are four quadrants: one, two, three, four. First quadrant is not very attractive, and you might not find a lot of business in first quadrant. Low operating income, low Bitcoin conviction. So basically, you can think of any failed business in this category. Like uh, I would not say a failed business because there might be $1 billion of businesses which have low operating income, and they might be into capital raising. They need continuous capital market access to do their operations or to perform their operations. I could think of utility companies. So they are also pretty huge. So I would not say, but from our lens, from a Bitcoiner's perspective, this is not very important. The first quadrant is not very important. Now let's come to the second quadrant. Second quadrant is pretty interesting. So the example of second quadrant is high operating income and low Bitcoin conviction. They have Bitcoin conviction, but like kind of in the middle. So think of it as crypto exchanges like Coinbase or Binance or any other crypto exchanges that you can think of. These exchanges have like very high cash flows because exchange business is very what I can say a great business, right? Because you are always making money. Like you don't need to be on the right side of the trade. So on every trade, you are making a fixed margin via charging, let's say 1% or 0.1% or 0.05%, whatever. So that number is fixed. No matter what, you are making money from traders or from anyone who is trying to buy and sell. So this is very high cash flowing business. But if you take an example of Coinbase, the cash flow is high and the number of like the amount of cash that Coinbase holds in its balance sheet is also high. I think they have around roughly around $10 billion in their balance sheet, but the amount of BTC they have is closer to 1 billion, or let's say 10,000 BTC, closer to. I'm not sure about the exact number. So these are crypto exchanges or whatever. I am thinking of should I put miners also here, but miners also have cash flows, but I'm not too sure if they have, or maybe they are somewhere in the quadrant of one and two, because miners started to put Bitcoin in their balance sheet, but they now have transited into AI. So they kind of come into second quadrant, but uh, cash flows, they are also into continuous capital market or capital raising activity. So I'm not too sure how good are they in their mining business. So that is one thing. Then now before going to the third quadrant, I want to come to fourth quadrant. So fourth quadrant is basically treasury companies like MSTR or Strive or Metaplanet. So these are different kinds of companies out there in the market. Now, the difference between 2 and 4 is treasury companies do not have uh, an operating income. I would not, let's not go into Metaplanet because they have an operating income with their other business, but uh, it's not equal to what other companies have or other traditional companies have when they think of cash flows. So the good example is MSTR and Stripe. So they have a good amount of Bitcoin conviction, like the one of the highest amount of Bitcoin convictions out there in the market, but they lack operating cash flow or operating income. So this is one type of companies which are out there in the market. Now let me come into the third quadrant and the Jack's envision of XXI. So he wants high conviction in Bitcoin and high operating income, so higher cash flows. Now, how is he going to build cash flowing business? So, to the people who are not aware, Strike has a good amount of cash flows, and they like 21 is also backed by Tether, so like good number of like the backing with XSI is good, but I don't know if they are working in the back end or what they are doing. But right now, in the last 6 to 9 months, they have not added bitcoins and they are also not communicated well enough. Like Jack has come out only once in the Las Vegas conference and put up this whole idea. And after that, or before that, there is very less, or I can say no communication with stakeholders, like what they are trying to do with XXI. So this is a disclaimer that I need to give. Then, so basically, Jack want to build high cash flow or high operating income business and high conviction in Bitcoin. So in Strike is also an Bitcoin exchange. Like you can go buy and sell Bitcoin, you can take loan against Bitcoin, you can borrow. Uh, so borrowing against Bitcoin is same. You can generate yield on Bitcoin. So you can. I'm not too sure if you can stake Bitcoin with access with Strike, but he has the vision to offer this kind of product as well. Okay. So now let's come into some numbers. What XXI is today? So XXI is basically they have around 43,514 bitcoins. They are second largest uh, Bitcoin treasury or Bitcoin holding or Bitcoin operating company, whatever you want to call. They are the second largest Bitcoin company in the world. Now this fair value is not a good stat because maybe they have not adopted uh, fair. What is the fair value right now? 43,514. Is it equal to? Okay, it should be. Let me just quickly check. Yeah, it's coming close to 2.6, not 2.95, but yeah, close to $2.5 billion in fair value. And the total shares outstanding is 651 million. And as I said, XXI is their ticker. As I was talking about, no meaningful operating revenue yet. They also have convertible bonds, which is the strike price is at $13, and the current stock price is at around $5. So from here to here, they need to go to convert these convertible bonds. Then one more interesting thing that has happened is Strike and Electron integrations remain execution is remaining. So the management or the board has floated an idea about merging Strike and Electron into XXI. So in this slide, you will be seeing a better illustration or better
Digant,
way in a better
what's
way.
electronic? You mentioned the management had decided to merge strike and electronic. What's electronic?
Electron. Electron is a mining arm of Tether. So Electron is the mining arm of
All
Tether.
right.
They are moving into like merging into 21. So as we all know, 21 is already listed. This is already listed. Strike is not listed. Now, what they are trying to do is merge Strike and merge Electron into 21 and form a new Bitcoin operating company. So now they will have cash flowing businesses with Strike, mining. This will also produce some cash flows. So or mining is also a separate thing than that a company can do. So that is one thing. Then with XXI, they can do their capital raising and other kinds of activities. So the logic is vertical integration, own Bitcoin, serve Bitcoiners, and produce Bitcoin and finance the system. So what does this mean? XXI will own Bitcoin. Although all these things after the merger, XXI is the company that will do all of this. Serve Bitcoiners. Strike Strike is serving Bitcoiners by offering Bitcoin-backed loans and other services regarding Bitcoin. I think they also offer line of credit with Bitcoin. Then produce Bitcoin with Electron. They will look to produce some Bitcoin by using uh, energy, cheap energy, and finance the system. So all these things will continue to finance the system. Now, what is Strike currently offering? So these words are Jack's words. Think of Strike like a global Bitcoin bank. Although they do not have a banking license and they legally not are a bank, but you can think Strike as a bank because they provide brokerage and custody services. They also provide payment services. They provide line of credit. They are also doing some product expansions in volatility proof loans. Now, when I heard about volatility proof loans, I came back to the thought of Karan. He's also building something similar with Reddit. So volatility proof loans, Jack has not talked about the idea, like what he's trying to do, but from the name, what I can guess is basically margin call thing can be insured with some premium taken against it. So uh, Karan was also doing this with buying some options, buying some put options. So let's say you bought or you took a loan against your Bitcoin, and that loan is now at 50% LTV, and Bitcoin price crashes and it goes to 70 or 80% LTV, and hopefully at many companies often liquidate you at 80% of LTV. So if if you do not want this to happen, then what you have to do is with the EMI, you have to pay some premium. And with this premium, what the company will do, what Strike will do is they will buy some put options on Bitcoin. So they are hedged in dollar terms because no no company is giving credit. Like let's say you have 100 Bitcoins and you own 100 Bitcoins. It's just that you are transferring your. So let me frame this right way. Let's say you have 100 Bitcoins and you are the owner. You have that in self custody, but now you want to borrow against that 100 Bitcoins. What should ideally happen? And Bitcoin standard is basically you deposit 100 Bitcoins and you borrow, let's say, 50 Bitcoins. So now you have economic exposure to 150 Bitcoins because the 100 Bitcoins that you have given self custody to the company, legal ownership is still yours. But as we all know, not your keys, not your coins, and all that. Basically, we are all aware of that stuff. But the economic and legal ownership is still with you unless you are liquidated. So no company offers 100 BTC and sorry, it takes your 100 BTC and gives you 50 BTC as a loan so that you can have an exposure of 150 BTC. What will happen in an ideal case is basically if they took 100 BTC from you, or you deposited 100 BTC into their custody, they will give you around 50% in dollar terms. So 100 BTC into the dollar value of Bitcoin, and you will get 50% of that thing. So if you want volatility proof of your loans, so if you do not want Bitcoin's volatility to affect your margin position or your position, so that you will not get margin called or liquidated, then you have to pay some premium. And I think this should be similar kind of product which Jack is trying to build. Then Bitcoin backed loans, this is simple product. I think I already explained about this. Payment, I'm not too sure about Strike's payment business, but they have lightning rails and direct deposit, bill pay. If I'm if I'm right, Strike wallet also offers to deposit USDT, and through this maybe they can charge some fees while making payments on some that kind of thing. Then trust architecture. So they are looking to provide proof of reserves and segregated collateral. So what is segregated collateral? So let's say I'm a Bitcoin hodler and I deposit my Bitcoin into, let's say, one BTC into Strike. Strike. So Strike already has some amount of Bitcoins in their balance. Let's say 10K. So they have 10,000 Bitcoins and I deposited one Bitcoin. So this one Bitcoin is not in the balance sheet of Strike. That is hold into separate account, separate wallet, let's say, separate wallet. So with this separate wallet, they will ensure that, let's say, for example, in a hypothetical case, if Strike goes bankrupt, then my BTC remains secured. My BTC is not uh, Strike's liability, or Strike's balance sheet liability to cover the losses. My BTC is separate. So in case of Strike gets bankrupt, my BTC is separate, sitting in a segregated wallet. So this is one of the important things that uh, the companies who are in Bitcoin-backed loans market. So if you want to try for segregated collateral, segregated wallets in which the companies keep your Bitcoin. Because if they keep everything in a single wallet or in a single balance sheet or in a single structure, then in the event of bankruptcy, your Bitcoin will be gone. So yeah, this is one of the important things when you take a look into the trust architecture. Now, basically, how will the value creation will be generate? Like, how will be the value created? So fees from custody, brokerage, buying and selling, trading activity, etc., etc. Interest income from Bitcoin-backed loans. So from whatever I am aware of how this industry works, currently Tether, Tether is one of the largest, one of the largest LPs. LPs, liquidity providers in the ecosystem. So literally every company has Tether in the backing to provide liquidity to issue Bitcoin-backed loans. Even like I recently wrote an article for Roxam comparing Bitcoin-backed loan products. So recently, Roxam also came out with BLOCK, Bitcoin line of credit. So I was comparing all the products, and what I saw is nearly 90% of these products are uh, basically Tether provides liquidity to 90% of these products. So yeah, just a fact to let you all know how our current things working. Then distribution and collateral are also one of the ways to create values. Now coming to mining part or the electron business. Electron business. So right now Electron is generating around 50 exahashes of through their mining infra. Uh, I think Shivam is much better person to talk about Electron and Electron business since he was working in this. I mean, he was not working in Electron's business, but he was developing some uh, what I can say, some software or some embedded software. I'm not too technical enough to understand what he was doing, but yeah, he was trying to build an open source Bitcoin mining software, if I'm right. So, but yeah, let's not deviate into that. And according to the claims, they are 5% of the Bitcoin network. Uh, don't take me on these numbers. You should go and verify for these numbers. Then, with Electron, what they are able to do is basically they are able to harness trapped energy, trapped energy, or you can also call cheap energy, or you can also call wasted energy. All these kinds of energies can be harnessed by Electron since they are a large mining company and they are doing mining at an industrial scale. So back in time when I was with, like, I was having a chat with Shiva. I said that, hey, like, I have access to cheap electricity, but running mining is like very hard job, very tough job to do. It's a different job to do basically because Bitcoin is hard money and bringing new hard money into the supply should be harder. It should not be easier. And I learned this with time and I stopped doing mining because uh, some things happened and basically it was not profitable for me to run miner. Now, through mining, they will produce new bitcoins or they will like these bitcoins which they will produce. If they have cash flows, then directly from strikes cash flows, they will go into buying Bitcoin from Electron. So they are creating a vertically integrated company where they are the buyers of the network. They are also the value providers of the network and generating cash flows. And they are also like directly buying. So let's say Tether has some, or sorry, Electron has some electricity costs or some variable costs. But because they have Strike's cash flowing business, they do not need to sell that Bitcoin into the market to cover that cost, which is kind of good from their perspective because uh, they can source Bitcoin cheaply. Basically, they are farming and they are trying to form an ecosystem. Although this merger is yet to happen. Like I'm talking about the possibilities of what things can happen with this. This merger is yet to happen. This has been proposed, but what I have seen in the past, 90% of the cases mergers go through because like a good amount of voting is into the board's hand, and the board has proposed merger. Uh, in most of the cases, merger goes through. Okay, now coming to the XXI engine. XXI engine. So what is XXI looking to do? So XXI is looking to do a similar thing like MSTR and Stripe. So they will look to issue preferreds, to issue convertibles, and to issue whatever products that they have. Some other interesting things that they can do with these two cash flowing businesses of mining and Stripe is basically they can, for example, right now, strategy or MSTR does not have any operating cash flows to pay dividends. In case of XXI, with these operating cash flows, what they can do, let's say they are making $1 billion operating cash flows, or let's say profit. So if they are aggressive enough, then what they can do, they can issue preferreds worth 5 billion at 10%, and 500 million goes into dividend payment. So still they are left with 500 million to whatever, or to operate the company and whatnot, etc., etc. So with operating cash flow, Tether has much more flexibility to rightly issue these products. I'm not too sure if I should use right there. Okay, whatever. Uh, the one thing that I was thinking when I was listening to Jack's video and I was doing some research with XXI is basically Tether will not be able. So why I'm talking about Tether? XXI is not will not be able to meet the dividend obligations if they go all in into the treasury model, because the capital market demand for BTC is very high, because a lot of capital trapped in traditional financial markets. So if they go all in into this business model, then there will be a point in time where they will have dividend obligations, which they will not be able to finance with their operating cash flows. To the people who are aware, strategy has a cash flowing business of 500 million per year. So it's not huge, but it's still there. But now they have grown a lot, and their dividend obligation is around 1.7 billion. So um, there will be a point in Bitcoin company where they will not be able to meet the demand, or they can remain conservative and go slow. But if they go slow, think of it from an investor perspective. Let's say they are going slow, and by going slow, what it means, like the increase in Bitcoin per share or BTC yield will not grow a lot. Where in case of Strive or in case of strategy, they are at around 10-12% of year till date Bitcoin yield. In case of Strive, I'm not too sure, 15-20%. So I'm not too sure if because building business takes some time, and building cash flows, operating cash flows will take more and more time. So I'm thinking that how will it look like when this thing happens? So uh, I want to recall a quote from Sailor. So he talks about when you find a, a, a great idea, like let's say whatever is happening with STRC is basically what market is doing, but structurally and fundamentally, it's as strong as it could be. So market keeps doing things what market wants, but if you go and look, STRC is around $10 billion or $10.5 billion issued, and the BTC rating or the BTC that is backing is nearly worth 30 or 3.5 times more. So there is no way that STRC is not going to get paid. Dividends are going to get paid, even if although preferreds do not have any obligation to pay the $100 back, but uh, like whatever. Basically, STRC is as strong as it could be fundamentally and with credit quality perspective. But in case of XXI, I'm not able to think a scenario where basically XXI will be able to generate increasing and increasing cash flows. Because if you look at SCRC's growth, it went from a billion to 10 billion in less than a year. So if there is this much demand in the capital market side of things, then at one point in time, your cash flowing business will not be able to support your dividends or will not be able to support your obligations with financing activities. But yeah, I mean, let's see how Jack does. I mean, they have talked a lot of good things, but from from an execution perspective, they are lacking a bit because all the things, the listing and whatnot, have happened 6 to 9 months back, and they are still sitting at 43,514. So this number is not growing. And from an investor perspective, if I am giving away self-custody of my Bitcoin, I would like to outperform Bitcoin. If the company is not doing that, then personally, I would not like to hold it in the long term or in the medium term. In the short term, maybe, like let's say the balance sheet is around a billion and they are trading at 700, 800 million. So they are essentially trading at discount. So at that point in time, maybe I can buy. But yeah, for the longer term, for us as a Bitcoin native investor, what I will look is who can compound my BTC per share. Okay. Then now coming to securitization, this is very interesting. Like they can securitize their loan book. Let's say Strike has issued, let's say, for example, $2 billion of loan, $2 billion of loan, and they will securitize this loan book. They will form an MBS, mortgage-backed security, or what is it called? Mortgage-backed security is for the houses. Uh, MBS collateralized. It's something backed securities or loan backed securities, something similar. I'm not able to recall the word.
Mortgage-backed
Oh, okay.
securities.
Mortgage
Uh,
backed. Yeah, MBS is mortgage backed. But what is the term for uh, which is backed by loans? I think there is a separate term. Uh, mortgage is,
Is it
if
CDOs?
I'm right,
CDOs, collateralized debt
collateralized debt
obligations.
obligation. Yeah, might be. If I'm right, sorry, CDO. If I'm right, MBS is for housing kind of things. Okay, whatever. They can do securitize their loan book, and literally, if they securitize $2 billion of loan, the balance sheet is like the balance sheet is freed from that $2 billion, and they are open to issue now new loans. So basically, whatever the income that they are generating with loan or issuing loans is basically from fees. Because when they securitize this loan book, what happens is the interest that they will charge is essentially going to the investors of the CDO or MBS, whatever, to the investors of these smaller units of these securities. So if they have issued 10% at 10%, uh, investors will be getting that 10%, and at the origination of loan they might be able to charge 2% fees of the entire loan, and they will try to do keep continuing these loans, and risk is also now not in the balance sheet. Risk of what? Risk of uh, the borrower not paying back EMIs. So that risk is gone from Strike's balance sheet. Now coming to mining revenue. Now this is very interesting. Basically, uh, I did my assignment for Blockstream Blockstream funds. So they have a product called BMN, Blockstream Mining Note. They have one to some versions. So what is this BMN? BMN is basically it's a securitized product of mining where you don't need to buy a miner, host a miner, and run operations. BMN is basically you have securitized whole mining business, and this note or this BMN one share is being held by an investor, and he is able to generate whatever amount that he's invested with this note. Let's say this one BMN is equal to uh, one one miner. So this can be like very smaller fraction as well, because essentially the point of securitization is you will be able to target larger audience by having the required investment less and less. So for example, if you want to buy a miner, it will cost you around thousands of dollars. But if you want to buy BMN note, uh, understand this like a share. So if you want to buy that, you will require, let's say, $100 or $200. So anyone can buy that note. And the last thing is Bitcoin backed debt. So this is similar to loan book. And all of this will generate basically again cash flows and more capital for Bitcoin and growth. So they will think that they should invest in growth or they should invest in Bitcoin. So I was thinking like how should a company think about Bitcoin? Me and Saurabh have a call scheduled for tomorrow, uh, talking about how should a company think in terms of Bitcoin. So maybe when Bitcoin is in the bear market, it might make sense for a company to buy Bitcoin right now and pause some of their business activities. Although it depends on numbers, how good is business growing, what is the CAGR of business compounding and whatnot. But the first thought that came in my mind is basically if Bitcoin is in the bear market, then the right answer or the closer to right answer is basically buy Bitcoin and stop expanding because you are being able to buy Bitcoin at cheap valuations. Then, so basically, this is the differentiator: finance against treasury assets, build operating cash flows, and not only the market's willingness to pay a premium for common equity. So, for example, with MSTR, with ASST, all the model works on and premium. Although now they have diversified into a lot, like STRC and all other products, they do not require enough high enough to pay or high enough to buy issue STRC. But if you want to pay dividends, you need higher MNAV, or you at least need an MNAV which will not dilute BPS of the common shareholder. Now, one last thing that he talked about is mergers and acquisitions. Now, come think of XXI already as a merged entity with um, this Electron and Strike. These are already merged. After that, there are still options for XXI because it is now publicly listed. They have access to capital markets. They have access to uh, a lot of things. They are generating cash flows. So mergers and acquisitions is also one of the things that they can do. Basically, if one of the Bitcoin company, let's take for example Naka, it's trading at zero point 0.5 times than that, and let's say XXI offers zero point 0.8 times, it's still a premium for Naka. So they might take this offer, and with this, they will be buying the Bitcoin conference business, UTXO, hedge fund business, and all the businesses that come under Naka. So these kind of transactions can be thought through with M&A, mergers and acquisitions. So basically, public currency and Bitcoin Treasury acquire profitable Bitcoin companies and strategic assets. There might be also a case where they not buy or merge with Bitcoin company, but they merge with a traditional cash flowing business. This also can be a thing because they are looking to increase their cash flows. So if the idea is to increase cash flows, they can also try and merge with different cash flowing business. Maybe they acquire a bank. Who knows? So whatever, these kind of things can happen in the future. And with acquisitions, more products, customers, and cash flows will come into, and this will again strengthen their capital market access, and this loop will keep spinning. Now, as I was talking about earlier in the quadrant example, so they are not Coinbase, they are also not strategy, they are something different. So they have higher conviction in Bitcoin, as I said. Coinbase is a crypto exchange, but they only have 10% in Bitcoin. Treasury company, they have more than 100% in Bitcoin. In case of 21, they will have Bitcoin, let's say 70% or 80%, whatever, and they will still have the other businesses, let's say 30%. These are not given by Jack. These numbers are made up by my own like thinking. Then operating breadth. So operating income is very high in Coinbase kind of businesses. Operating income is very low in strategy kind of businesses. And what Jack is trying to do, he is trying to build high operating cash flowing businesses as he is looking to merge with Strike. Distribution. Basically, who is the customer of Coinbase? Basically, a trader. Who is the customer of Treasury Company? Is basically investor. Who is the customer of Strike? Sorry, XXI. All the customers of Strike and also the customers of strategy like customers. They are also the customers of XXI, or let's say from a distribution perspective. Primary engine, trading and speculation. Also, I forgot about when I talked in that quadrant. High cash flowing business can also be businesses like betting markets. Betting markets like Kalshi and what is the other? Poly market. I'm not too sure if these businesses have some Bitcoin. I think they do not have, but still, these businesses are very high cash flowing businesses, but they generally drive value from trading and speculation. Strategy drives value from capital market BTC purchases, and 21 is trying to derive value from different products, mining business, and financing. So a mixture of the three. Core risk, regulation, competition in crypto exchanges. Here the risk is Bitcoin price going down, also dilution. MSCI are issuing a lot of shares. The risk is again BTC price integration and execution. So risk increases. Now, what is the time? Okay, it's already 9. So I think I have explained very well about XXI and what they are trying to do. These are some scenarios that can play out. Like the bull case is all the things go through. They become a Bitcoin operating or ideal Bitcoin company as Jack frames these words. Uh, so this is bull case. Base case is they are treasuries first, operations are emerging. It takes some time to merge different businesses, but this is the base case, and bear case is they do not do anything and they just become a Bitcoin proxy vehicle for capital markets, which is the current case. Like they are not doing strategy kind of thing. They are not doing Coinbase kind of thing. So right now, the market is treating XXI as this. So what would prove the thesis is basically Bitcoin per share growth, BRR. BRR is similar to BTC yield, growth of Bitcoin per share. Then cash flows, financing, debt cost, and dilution. So if XXI has higher cash flowing business, then there is a possibility that S&P rates them higher as compared to strategy. So strategy is rating is B minus, but because XXI has a nice credit rating, I mean they do not have, but they have nice cash flows. So if they go to S&P and ask themselves to rate, and they are rated at triple B investment grade rating. So the cost of issuing prefs might come down to 6 or 8%. So this is also interesting thing that can happen. Then valuation, premium or discount, treasury quality, free versus pledged Bitcoin. Because they have strike, they might have some pledged Bitcoin. Okay. Then strategy created the blueprint for the Bitcoin Treasury Company. 21 is attempting the blueprint for Bitcoin operating company. So what I think personally is going forward into the future, there will be a lot of these kind of companies, like Bitcoin operating companies, because after a point in time, the traditional BTCTC model will have a limitation. I, I'm not too sure if it will have a limitation, but everyone can't do capital market uh, capital market raises as good as strategy or as good as Stripe. So because of this, every company can be a Bitcoin operating company. Just keep Bitcoin in your balance sheet and do whatever business you are doing, and just add profits into Bitcoin. So this is one of the ways, and I think a good number of businesses into the future. Let's say on a Bitcoin standard, I think this will be an idealistic scenario. But yeah, let's see how things go. Okay, thanks a lot for attending this session.